All right, so why does all this matter? Well, going back to what I said earlier, when you know how the gears all turn, it's easier to understand the story that the financial reports are telling you. If you think back to when we first met Lou, I told you that the four core financial statements fit together like a puzzle. Each piece comes together to tell the whole financial story of a business. Well, when you know how all of the information flows and how the statements work together, when it comes time to review, you will gain a lot more insight into the nuts and bolts of a company. Here's a good friend of mine with a few words.
So, as we've been talking about financial statements, we have encountered many different kinds and many different ways of looking at them, probably in the order of importance or in the order, at least according to business owners, that profit and loss or income statement, pretty much the same thing, are going to be the pieces that they look at on a very regular basis. What did I make? What did it cost me to make that? And what did I spend for my overhead? That's their profit and loss statement. Really important for most business owners. They almost all will say, I need to see that. Balance sheet obviously is your next one that's really important. Of course, we've talked already about how they are connected, that the net profit or loss is going to show up on the balance sheet in the equity section. But the balance sheet is showing us what we owe and what we own and what our equity is, what our interest is in the business. And so all of those things are really important. Of course, connecting the two of those together and reading information from both of those, you have your statement of cash flow telling you what happened since the beginning of the period on that report to the end. Where did your cash come from? Operations and any investments, any assets, liabilities, and those changes that have happened there. That is what you're looking at with your statement of cash flows. And those are the three main reports that we look at. Now, what we want to do when we review those is make sure that we understand the numbers that are coming through and we can account for all of them, thus the accounting that we do, the keeping of the books. We need to know that the information showing on those reports is accurate and we understand what the numbers represent. So when we look at the cash balance on the balance sheet, we know what that represents because we have reconciled that against what the bank says should be in the account, comparing it to any balances that we have on the books, along with outstanding deposits, outstanding checks, or outstanding expenses, whatever those things are. So we've reconciled those. We've reconciled what the bank says to what the books say. We can now account for the dollars that we're showing on that balance sheet. We do the same thing with all the other accounts that are on that balance sheet: accounts receivable, accounts payable, inventory, loan balances, and so on. And we reconcile those, we review those, and we make sure we know what those numbers are. We look at our profit and loss. We make sure that it's reasonable, that we had a certain number in our telephone expense or subscriptions or whatever. We look at those. Is that typical for a month to month? Often, as we're reviewing financial records, I don't want to look at it in isolation of just 1 month or 1 day or 1 period. I like to do comparisons because that helps me see the reasonableness, especially with new clients. But even existing clients, you might not notice that $1,000 phone bill when last month it was only 600. We look at a lot of different clients and they may realize that's a big jump, but we may forget because we see so many things. So doing comparisons is really helpful, but honestly, it's really helpful for the client as well. They love being able to see a trend. Each month it was this, and then it jumped up or went down or whatever the case is. So reviewing those financials is really important. Helping our clients to understand the importance of the balance sheet. As we get started working with a client, cleaning up that balance sheet is really important because it's going to flow into the profit and loss statement. We recently had a client that had a balance sheet that I thought looked a little strange. They had a piece of property on their books that they told me had sold and had sold for several $100,000. And yet the balance on the balance sheet was like $3,000. It's like, that doesn't make any sense that there would be an asset worth $3,000 that had just sold for several $100,000. And what we found out was that when they recorded it, they forgot to write off all of the additional expenses that they had put into that asset. And that should have been carried over as part of the cost basis for that asset. So looking at that balance sheet is really important to make sure we know what those numbers are and we review those. If you're in an accounting system, being able to run reports that help justify or reconcile those accounts is really important. Being able to understand when you look at accounts receivable and it says $10,000, we see every customer and every invoice that adds up to that $10,000 we see on the balance sheet. That is the way that we reconcile those things and make sure that makes sense. If there happened to be a really large balance for a customer that we're never going to collect, we adjust those. So as we review those things, we look at those numbers, make sure it looks reasonable, make sure we can reconcile those and tie them back to reports that give us the details of what happened. And that is going to allow us to have the confidence in the numbers that we're presenting to our clients on those financials, and then help to explain that to them so that they too can feel confident about the numbers and then make good business decisions based on the information that we've provided in those financials. Ultimately, that is our goal, that we can support that business owner with the information on these financial statements that allow them to run their business and make good, sound financial decisions based on that information. And yes, of course, to do their taxes at the end of the year, they need that as well. But ultimately, our goal is to help them to run their business, and having confidence in those numbers because we know what they are, that is going to help you be set apart from many other accounting professionals and bookkeepers, because you can explain the numbers, justify the numbers, and then help the client understand those numbers.
Now, as you've heard, to go from basic to boss bookkeeper, it's important to understand how things work together. If you can do that, the financial statements will tell you more than just what the account balance is. Here, take a look at some examples of what the financial reports can tell you. When you know how everything operates,